Happy Tariffs Day, everybody. I'm going to raise prices. Everyone doing okay? Better shop at Walmart today before they have a chance to change all the prices and everything. Okay, hi Paul, how are you? Also, good NFP day, everybody. So, people that followed me know my opinion. What to do on red days like this is react to the reaction. You know, I remember once somebody said, Dale, I bought the euro right before the NFP and it came in weak and the euro rallied 100 pips. I said, good guess. That's all it was, right? I mean, unless you bought the break earlier in the week. For some reason, I think I'm still going to be able to buy this cheaper up here, but we are flirting with this breakout right here at 1720. But I could also see a 1-2 up here. S&Ps came back pretty good yesterday. We'll see what happens. I still think there's a chance they get to here. And NASDAQ gets to here. I'm hoping, you know, sometime next week, if it breaks down, that's, you know, you're going to know it's bad if it closes back under the 70-40 level. Anyway, I still think there's a chance that maybe they try and shake out bears over this high in the next several trading days. Crude is pulling back. Okay, it did diverge, almost looks like a little rounding top or left shoulder head, right shoulder neckline underneath it. So if we stay under, say, 73, break down 73, should take it to 71. So we'll also see about this one. And, you know, I just think about what I want to do on an NFP, and my tendency is to fade the action. So we'll see what we get. I'll be around. If I have any thoughts, I'll share them. But you have to say that the dollar is still giving us a chance for this to be topping. But as I said yesterday, look at the levels we're at. Blake showed it too. Why can't we pop back to 94.60? Again, you know, correct this recent decline. At least you really have a fairly important line in the sand here in the dollar. Starting to look like maybe we're going to get a descending triangle. So let's just try a horizontal here. And then we get some type of rally, you know, 94.70 to 95. And then the next time you roll over, it's a decent objective. Would take you down to here, this next support level. So my best guess is I'd like to fade dollar strength because I think there's more downside left in the dollar. And this is going to be a shorting opportunity if we get a dollar rally, in my view. That's my guess coming in. Everyone with me? I'd also use breaks in gold to buy. I think the low's in. Gold shares had a great week. But if you get a dollar pop, maybe you get a precious metal pullback. Silver, I think we could get a new low, okay? Maybe down to 1550 or so. Still looks like it could. Looks, you know, so the bulls will say we have a head and shoulders. You know, there's something wrong back under 1590. I talked 1580 for about 3 months. The low was 85, but I thought it was going to be a long-term buy in silver, and I think both gold and silver are just going to be trading rallies. Here's actually where I think silver could go to later on down the road in the fall is off this line. Oh. So, you know, off this. I don't know if it's gonna work. Okay, it's a different line, but it comes in right around. This line will come in right around 1450. So that's what I think could happen to silver into the fall. And then the gold, and I know a lot of people are, I think it'd be pretty natural for us to rally back to the breakdown, 1288, right? If we get back over 1288, I'd change my tune, but I'm thinking this is just a rally. Maybe it's, maybe it's got more, maybe it's got 1300 in it. But I will say this, the trend line that it broke, that now it's back inside, that 1240 to 1360 takes you down to 1120. So it's too perfect for this support level to hold it, in my view. We went right to this low. We had a great bounce, very nice bounce, 120 bucks. Maybe we get half the bounce here, right? But back under 1240, you just do something, subtract 120 bucks from 1240. What do you get? 1120. I know some people looking for 1180. The big bears are looking for these lows to be challenged and taken out before we have another bull market in gold. So those are my views coming in. Wonder what Blake's position for it. I know he doesn't care about any red events. He'll take stuff into it, and I'm wondering if he's looking for opportunities after it. So what's on your mind, Blake Morrow?
You're saying there's a chance.
Huh?
You're saying there's a chance.
Yeah.
Do you remember the movie Dumb and Dumber?
Yeah. Is that us?
No, that's when Jim Carrey was trying to hit on that beautiful woman. Gosh, I forget what her name is, but so you're saying there's a chance. Oh, it's so funny. So every time I hear you saying that, you're saying there's a chance. Yeah, there's. I just can't.
There's always a chance. Yeah. So what do you think? Who was the other guy in Dumb and Dumber with him?
Somebody is going to help us out because I can see him clear as day.
All right.
No, it wasn't Meg Ryan in the movie. Slavash says it's Jeff Daniels. Thank you, Mark.
Oh, yeah.
Jeff Daniels. It's Jeff Daniels. Yeah. Guy's hilarious.
Yeah. He's a great serious actor too. I think I could do that.
What is Dumb and Dumber? What is the name of the woman that is is Dumb and Dumber?
I don't know, but I think that would be, that that maybe some guys out there that have rooms.
Lauren Hawley. Sorry, I'm sorry. Lauren Hawley. Yeah, she's awesome.
I think I'll start a trading room, Dumb and Dumber Trading.
Yeah,
you think it would work out there?
It might. You could probably name this show, at least in the morning, the first quarter of it, or first third of it, and it could be Dumb and Dumber. That's for sure. Yeah. So I'm actually feeling a little bit Dumb and Dumber this morning because it took me a while to get to sleep last night. One of those nights where you just toss and turn, and I think I tossed and turned for about an hour and a half before I finally fell asleep. When you only get 5 hours of sleep or 5.5 hours of sleep, if you toss and turn for an hour and a half, it kind of, that's how I feel this morning. I'm a little tired. I'm yawning right now, which is never a good sign. That means what I'm gonna have to do is sleep in between World Cup games, I think is what the plan of attack is today. But I'll be awake, obviously, for non-farm payroll. This is the biggest number of the week, and this is what we're all looking forward to. And this is the euro dollar, and the euro has been pretty resilient as we push up towards resistance. And you can see, and let me draw this out for you guys.
What's the temperature high going to be? It's way over 100 here now.
It's probably going to be about
120.
No, yesterday was 115. So today's going to be a little less than that because it was windy yesterday. So it was so gross. I had to run an errand in the afternoon. It was so hot that I didn't even want to go in my pool. That's how hot it was. Yeah. So, looking at the euro dollar, it's pretty apparent that we're set up in a wedge here. So the wedge is capped by the 618, which is 117.25, I guess you can say, and you can see all these previous lows right here that are holding, and then this previous high. So we're running right up against wedge resistance, and then support. It's 116.80. And we break below that, it's dollar strength. But one of the things before you get too carried away, considering dollar strength, just think about for a second that we have. I mean, some people would mark this as an official trade war now. You said Happy Tariffs Day. I think, is that what you said when you came on?
Yeah.
The bottom line is, tariffs are now starting to be imposed, and this went from a trade dispute to a trade war. I think you could classify it as that we're officially in a trade war now. So.
You said it would happen, Blake, before it did.
What's that?
You forecasted or had a belief that this was going to mushroom into this.
Well, yeah, I mean, it's not, does it escalate from here? I'm assuming it does. I'm assuming it gets worse before it gets better. So, and as you pointed out, hey, from a consumer standpoint, this is where things are going to start to get a little bit pricier. Now, the dollar, I don't think, is going to be a beneficiary at this moment. So if you do see dollar weakness following this number, so let's say the data is stronger, okay, I would anticipate that you have to short dollar strength today. Right. So. And one of the reasons why is if you look forward, and let me grab this. This is a Bloomberg economic data. This is what I watch when the data comes out. So you guys may see the data come through Twitter, or you see the data. You might be using Forex Factory, which is right here. Right. Mm-hmm. So, shoot. So, let me move this over really quick. So this data here, this is all the data that I'm seeing. Okay, and so you'll see that we have Canadian data, employment data. All the job stuff. So this is where the data will hit first. I'll see it probably a half a second before most of you, if not, 3 or 4 seconds, especially if you're just using Twitter. If you're using Twitter, then there people on, they have to copy the data, put it on Twitter, hit send. I've already seen it. You know what I mean? So I'm going to see this data before anybody else. But the reason why I'm pulling this out today is because we have been consistently around 200,000, and you could quantify it as full employment in jobs data for the last let me get rid of this really quick. I'm just going to pull it up over here. If you look at where we've been at for like the last 2 years, I would say, or more, actually going back to about 2014, we've been in the 300,000 to roughly 100,000 mark for quite some time. All right. And I think with the trade dispute war heating up, you're going to start to see the numbers worsen here in the U.S. moving forward, because as this trade war heats up, you're going to have employers that become a little bit less, they're going to be a little bit more reluctant to new hire from here on out. So I think you're going to start to see our data erode moving forward, especially if this becomes more of a prolonged trade war. So any dollar strength that you see following today's data, I think you need to fade it. That's the way I'm going to view it. So if the euro should dip, and it may, I mean, I'm just thinking ahead here. If we dip down to like 1650, I'm a buyer. You might go, well, Blake, that's breaking that wedge lower. Yeah, it's going to trip stops, and then you gotta be on the other side of that and be able to pick up the euro at a cheaper price. Now, if the data comes in weak, which, you know, let's take a real quick look.
Almost due for a surprise, you know.
And we haven't seen one in a while, and liquidity is really poor right now too. But if you look at like the ISM number came in, like here's the manufacturing numbers, they came in good, right? But the employment component of the ISM didn't. Hold on really quick, Dale. I'm going to put you on mute for a second. Thank you.
All right. Okay. All right, guys. Any questions you have on any pairs? I could take a few questions. Okay. Euro Aussie? I haven't looked at it in a while. There's your weekly.
We can see your screen, Dale.
You can
still
see Blake's. Hi, Steve. How are you?
I'm good, mate. How have you been?
Good. Oh, good. I'm kind of glad it's Friday. Let's see here.
Are you going to watch
the holiday in the middle of the week? Oh, yeah. When's the first one start?
In 1 hour, 43 minutes from now.
Yeah. And it's so hot out here right now, Steve, you have to stay inside. It's like
well, more or less it's the same here. It's quite hot actually here as well.
Yeah, I don't like the heat. I'd look for one. To me, it looks like we could have another push up. You know, maybe this is 1, 2, 3, but it looks positive and would look negative under 7.5. So you have some decent areas, but to me, it looks like we could have one more shot up to the upside here towards 59.
We're going to have a look at the euro crosses because there is a couple of things I want to show in.
EG is going to finally close over 88.40. I don't know how many times I like a broken record, but I look at EG and the Bears can't win. Maybe the Bulls are going to start to squeeze them. So we're going to take out this.
We still have some distance from the previous high and the descending
this one here
resistance.
89.5 up here, you mean?
No. I mean the one that came close to 89, that intraday week higher 5 days ago.
Here. Oh yeah, 5 days ago.
Yeah, whatever it is.
Yeah, right here.
Yeah.
Oh yeah, we could take that out on.
We need to take that
today.
out to to start actually looking higher. Until then, because that also at the moment confluences with the descending channels.
Look at these weekly candles. If we close above the 2-week closes 87.83, looks like it's gonna be a 2-week reversal right at the 50-week moving average. I think you have to be long. It's threatening to break out. I know it's worn bulls and bears out, but I mean, you think about the dollar rally we had, it should have already been 84.
I think it's too early. I think that we need to see a break above this descending channel first, and the daily or weekly close, whatever, and then we can discuss about it. Until then, I think that we need to remain patient because this has been going on for too long already, right?
Sorry, guys.
Hey,
okay.
welcome back.
Hey, sorry about that. My office was calling me. Here, Steve, you want me to take over for a second?
Yeah, go ahead.
It's not my screen, mate. Go ahead and
Okay.
take over.
You gotta know it's me. I have Euro Pound up.
Sorry, guys.
Right,
My
Steve, I'm the only one.
office was. Can you guys see my screen?
Yeah, I got it.
Yes,
Cool.
we can.
All right, so my office was just calling me, talk to me really quick about some technical levels. So as I was just telling those guys, same thing I was telling you guys. Here's the euro dollar running up into resistance, and here's the other issue, and we were just discussing this in the office. If it's a bad number, the euro is going to be 117.50, 117.60 bid immediately. If it is, then this is a bullish wedge, and so you have to do this. You have to try to take any dip you can. If we get a push out of this resistance, then you got to just wait for some sort of 10 if we get it, and that's it's questionable if we're even going to get it. And so there's the euro and the pound. The pound, I'm still looking for a move up to 133.10. I know it's been hampered by some Brexit news, but in my opinion, we're coming out of this descending wedge, so it's still very bullish as far as the cable goes. And the dollar yen, I mean, obviously 110.30 this is a big deal. If we break through 110.30, that's where it exposes some downside. But I would think that any strong number up towards 111 has to be sold. Remember, I'm going to reiterate what I said just a little while ago, that if we get a strong number today, the numbers moving forward are probably going to be weaker. Employers are going to be very reluctant to new hire in a full-blown trade war. It's going to start to weigh on sentiment. So you have to sell dollar strength, in my opinion. That's the way I'm looking at it today. Now, the last thing that we need to look at is the dollar Canadian. The dollar Canadian, we do have Canadian and U.S. data coming out at the same time, and you can see the dollar Canadian very similar to other pairs like the euro. We got a wedge; it's wedging lower, and we could possibly break lower. The only difference here is that the dollar Canadian is heading into really key support, and it's key support for a couple reasons. It's a uptrend line. You can see it right here. Real strong uptrend line, and then it's also the breakout point, and then also the weekly breakout point could take us all the way down to 130. But this is whether you like it or not, this is a very bullish breakout, and obviously it's been a little weaker this week following last week's reversal candle. It's brought in a little bit of weakness this week, but I still think you have to be a buyer on dips, and this is the only thing that I'm looking at that I would be consider buying a dollar dip, and especially if we have some risk aversion, because if we have some risk aversion, the dollar Canadian may dip but then reverse, as commodity currencies comes under pressure. Now we do have this inverted head and shoulder pattern in the Kiwi that we pointed out yesterday. It is still trying to play out. 69 cents would be where we go if we complete it. But the fact of the matter about the Kiwi, and this is where I'm a little conflicted about, like the Canadian too, that the Kiwi has this inverted head and shoulder pattern, but it's also got a false breakdown. So if you're short the Kiwi, you're really on high alert right now, because it tried to break down this last week, and then it has obviously reversed, so it stopped out a lot of people, and that gives it a lot of room to run higher if it wants to. But again, if we have a little bit of risk aversion, what happens with the commodity currencies? That I'm not clear with. I'm not clear on. Like, I don't know if if the stock market weakens from here as trade war fears start to escalate. Is that going to weigh on the Kiwi and the Aussie? I'm not sure. Right now, the Kiwi and the Aussie are pretty well bid, but I'm not 100% sold on the fact that they're going to stay bid, if we have any type of risk off. And last but not least, the U.S. dollar Mexican peso is really reversed following the elections. We are coming into a 618 retracement, also 127% extension and 200-day moving average. We should have some support down here around 1905. So this is one of those that if we get down to 1905, 1903, I would be very careful about being short, especially if the stock market starts to weaken, because if the stock market starts to weaken, we could see the U.S. dollar Mexican peso start to bounce, and a lot of that, remember, we just came off a Mexican election where I think longer term it could actually be more bearish, the peso versus bullish, but we'll have to see moving forward. And then obviously we have the dollar index, which is setting up double top, which is a big risk to dollar bulls as we're heading into this NFP in a few minutes. So with that being said, I want to wish everybody good luck today. Any dollar strength that we see, be very wary of that. Be very wary of that moving forward. And Steve, what comments do you have going into NFP this morning?
Good luck.
Low liquidity, World Cup. What are we in? Are we in quarterfinals today? Quarterfinals?
Yeah.
Yes.
Yeah. So World Cup quarterfinals.
And tomorrow.
Lack of liquidity.
Today and tomorrow.
It's summer. And we have two big data points from Canada and the U.S. So it's going to be a interesting day.
Well, you do some work outside today, buddy.
Hell no. My working outside will be, lifting a Coors Light into my mouth in my pool.
That's what I thought. I got the picture. All right,
good guys. Hey, good luck today, and have a great interview with Adam Button from Forex Live.
Adam,
yeah, that's going to be.
He'll give us some good ideas. Yeah,
that's going to be good, indeed.
Yeah.
All right, guys.
All right.
Bye. Okay, Blake. See you later.
I'm here. I don't have a service to hit you with the number right away like Stella does.
Yeah, don't worry about it. Okay. So we're obviously expecting employment data both from the US in exactly 1 minute, actually, both from the US and Canada. We also have IVPMI, for Canada later. What else is it to report? That's it, more or less. Actually, we need to see, of course, qualitative data having to do with employment, like participation rate, so we can judge if unemployment rate, dropping or remaining what it is. Let me say here that we're actually expecting 190K having to do with NFPs. And we're also expecting unemployment to stay at 3.8%. So judging on that, and we're expecting Canada to create 24,000 jobs, and unemployment to stay at 5.8. I have here on the bottom right the USD yen. We know that it's one of the most sensitive pairs to use data, and I'm going to keep here the USD CAD, which should be affected both ways. By the way, USD CAD is still on its way lower. It's currently, it has currently stalled at the previous high here at 130, 130. But if we do see a continuation lower, we can easily come down and retest the 130 level, which is what I was looking for. Now, buying it down there might be a good opportunity, but let's first see if we're going to make it there. Anyhow, we're very, very close to getting the data, just a few seconds away. So let's see what the market gives us.
$5,432.
It's a little bit more, actually. By the way, do I have the time to very fast? Yeah, here are the 10 years, 10-year treasuries as well. As you see, they're testing some resistance level. If we, after the data, we might see a move higher or a failure from there. So let's see what we get. Okay, here we go. Non-farm payrolls, 213.
Strong number.
Let me see. Unemployment rate climbed up to 4%. Okay, that is definitely not expected. I'm guessing that this has to do with increased participation rate. We have a trade balance more or less as expected. I mean, we're expecting minus 43.7. We got minus 43.1. So yeah, just slightly better. We got very good Canadian data. We got 31.8K jobs created in comparison with 24K that we were expecting. So like roughly, almost like 30-40% higher employment than we expected. We got a worse trade balance from Canada though. And yes, the increase in unemployment had to do with participation rate going up from 62.7% to 62.9%. So the unemployment climbing up to 4% from 3.8 is not something, that it's not something that we should take as a negative sign for the economy, because it's absolutely and totally due to an increase in participation rate. If I may say, participation rate has been in a long-term downtrend, and seeing an uptick in participation rate, meaning that more people are coming in, the employment market is a positive thing to consider. So I would say all in all, we have positive data coming out.
And a weaker dollar, and the dollar is selling off on it.
Yeah, so far it is. I mean, Euro USD, which is here in the middle on the top here, is near the highs, actually pushing the highs, pushing currently as we speak the 50 DMA. Right. Now I'm a little bit torn here, because there are two interpretations here. If I want to draw the trend line like this, taking into account the week or not. Anyhow, even if this is the case, we're about to test resistance in the Euro USD. Cable, on the other hand, failed yesterday to penetrate through this 132.90 roughly area of resistance. For me to be looking higher, I would definitely need to see a break above this 132.90, 133 level. Then I'm going to start looking higher towards the 136 area. Why? First of all, because 136 is a horizontal support resistance area. Second of all, because the 200 DMA is also there. So I think that, once and if we clear actually this area here, I think that, getting a move back to 136 is likely, a level at which I would actually like to try being short. Okay. So S&P is reacting positively for now. I mean, it was near the lows of the day before we actually got the data. Now it's turned positive again, but it's still the market's still undecided. I mean, it's still oscillating. Actually, Aussie is near the highs. I bet that more or less the same applies to Kiwi. Yes, yesterday we showed on the 4-hour chart the inverted head and shoulders formation that we had. And speaking of which, and we had a friend asking for Euro Aussie, I think that we should leave Euro Aussie aside, because the more interesting is to have a look at the Euro Kiwi. Why? Because Euro Kiwi has given us a potential head and shoulders formation. And where did that happen? After finding resistance. You can see it here. This is a 4-hour chart, actually. So I think Euro Kiwi probably looking better at the moment. Regardless, I think that we have to turn our attention to the main pairs now that we have data, and we'll go back to those afterwards. So USD yen, so far, the daily candle is a spinning top. Yesterday we had another spinning top. The day before yesterday we had a pin bar. Bottom line, so far this is the third consecutive day that, after seeing a big reversal, because that was this day here, the 3rd of July, was an outside black candle, which is definitely a bearish reversal candle, and the next 3 days that have followed so far are indecision days. Now, given the reversal that we had prior to those, I wouldn't mind seeing another push to the downside. If we go to the 4-hour chart in the USD yen, you can see that the bullish interpretation is that we were in a triangle and we broke above it, and we might be oscillating before pushing higher once again. But on the other hand, we might have seen a little move down, a corrective move higher, and that might produce one more leg lower. I think we're going to know very soon. By the end of the day, we should have a better understanding of what USD yen wants to do here. Now, let's visit the DXY, because the DXY definitely looks like it wants to push lower from here. You can see DXY currently pushing the lows of the day. We were monitoring this ascending wedge. We broke below it. I think that the area that we should pay attention to is this one here. Why? Because it's, previous lows here. It's also a retest of this ascending channels resistance, likely a support. So roughly the first area of support is roughly at 93.40, 93.50. I think that the DXY should make it, and even if we see it from a perspective on an ascending wedge, what does the theory tell us, Dale? That at
100% retrace from where you anchor it.
Exactly, that we should at least revisit the bottom of this ascending wedge, which is exactly at the area I mentioned, roughly the 93.40 area. Okay, so I do think that at least some more dollar weakness is a very, very likely outcome from here. Okay.
And actually, Steve, that should be a relief for equity bourses, especially emerging markets that have been getting hammered during this strong dollar period. It'll take some of the pressure and, kind of gives a little lift even to our own indices, because, weaker dollar takes away the argument of exporters being under pressure and all of that. So, this may keep the stock market rally alive at least another 2-3 days.
That is,
I'm not looking for a long time. Till mid-month, maybe, at the most.
That is a correct assumption. By the way, here's the inverted head and shoulders in the Kiwi, and I have a friend here that is saying that Aussie USD is doing the same, and he's right. It's not so pretty looking. I have to say that this is a 4-hour chart, by the way, again. I have to say that obviously the inverted head and shoulders on the Kiwi looked, better. I mean, it was more proportional, but regardless, this can also be viewed as an inverted head and shoulders formation points higher, right? So definitely Aussie and Kiwi have already showed their intentions to reverse higher. Now, if we go to the daily chart, and you'll see how important, once again, I'm going to show you how important candlesticks are to time reversals, because I remember the first day we got a reversal, first of all, RSI was diverging in both of them. Second of all, one of them posted the tweezer, Kiwi posted the tweezer's bottom, and the Aussie posted like a big, posted like a big inside white candle, which almost retraced completely the previous candle, right? So, we already had some indication, and especially for Aussie, it actually did that from a confluence of support. So we already had an indication that some kind of a rebound would happen from there, and definitely we're getting confirmation now. By the way, as we speak, Euro USD is pushing this confluence of resistances, the 50 DMA and this triangles descending trend line resistance. Cable is almost at resistance as well. I mean, we need another 20 pips. So it's interesting to see, because if actually dollar confirms this move lower, and we do see daily and weekly closes above the equivalent levels, I think that we should at least get some follow through in the week that follows. Now, let's have a look at the metals here, and let's have a look at crude, and let me explain here what I've been doing with crude. First of all, one thing that worries me, because I'm still long 1/4 of a position for gold and 1/4 of a position for silver, is that gold, this is the third day that it's attempting to clear through this 1260 zone to the upside. It's failing to do so. Silver is contained, below this resistance zone as well. So, their inability to push higher is more or less indicative that, there is no strength coming through at the moment. Crude, on the other hand, is trying to clear the first support area to the downside. Yesterday, I closed my pattern in play, but as I explained in the chat room, I did not book all my profits. I actually booked only half of my profits in my short position. I'm holding the other half because I do think that there is a good chance that crude can produce quite a lot more downside. I was explaining that yesterday. My next target is at 71.50, and if we actually move below that, I would be looking for 69.40 as an area of support. So I'm going to be holding the other half of my short, and I won't be actually looking forward to getting rid of it unless I'm sure that actually the uptrend is resuming. Let me see. I have no audio. Yeah, there's nothing I can do for that. Then you need to restart. Silver gold ratio. Yeah, we can have a look at the silver gold ratio. Euros and Euro Kiwi. Let's have a look at them very fast. By the way, let me go back to the USD yen to see if it's actually doing something different before we do that. Nope, USD yen still stuck in a spinning top. So just consolidating, third consecutive day of consolidation. And let's have a look at the treasuries. Treasuries, from what I see, attempted to move higher. Let's go down to the 4-hour chart and have a look at the treasuries here. Blake also pushed an update yesterday. Now, there are two scenarios here having to do with treasuries. Scenario number one.
That happened today, that big tail we're getting, that's today's action?
Yep, after the data, exactly.
That looks bad to me.
That looks bad to me as well so far, because as you see, I had already drawn this like words, right? So I have to tell you something. Blake pushed an alert yesterday that showed this.
I see. Yeah.
As a bullish formation, and he is actually right.
Yeah,
it is.
It's the action today. It's the action today.
Exactly, because a break and the daily close above this horizontal area of resistance does constitute a break higher from a bullish formation. But I'm also looking at a bigger formation here, which is this ascending wedge. So I have to tell you,
it hasn't been impulsive off that low. Yeah.
Exactly, and especially if we end up having some kind of a big reversal today, some kind of a big reversal, if it's too early to say, and we end up breaking below this trend line support, I'm going to be looking lower, and I'm going to be looking quite aggressively lower, right? Anyhow,
a lot of wedges, Steve. Have you noticed how many wedges you've talked about today? It's funny how sometimes in markets they just start popping out everywhere. It makes you think it's really all one market, and the formations are, everything's correcting or everything's moving impulsively, and it's like everything's in these wedges, which are recoveries that end up being reversal formations.
That is very true, and that's what we're seeing. That's what we're seeing here as well.
All of them.
We have lately during the last few days, we have a decent amount of wedges and a decent amount of head and shoulder and inverted head and shoulders formations, and this is definitely the case. Anyhow, for me, it's important to see not only what kind of action we're getting following the data, because it's still very early, but for me, it's going to be even more important to see how this day is going to actually end up closing in the vast majority of the pairs, because we might be looking for some accelerated dollar weakness, and that's going to be the theme of next week. Or if we do see some reversing of that, and let's assume that we get some dollar strength coming through soon, and we get rejections from so important levels in the vast majority of the markets, then it's going to be a totally different beast to talk about. So I think it's going to be important monitoring the rest of the day and seeing how we close. And the same applies with risk, having to do with risk now. I will reiterate what I've said, which is I am seeing definitely different potentials for a bearish follow through, but as long as S&P holds the 2690 area, I would remain very cautious. Now, there is obviously the possibility that the S&P just wants to form a head and shoulders formation here, right? As we've said, many of those. So if it fails somewhere here and comes down to 2690, and then it breaks below 2690, then we're definitely talking about follow through. And if we want to talk about follow through here, since it's horizontal, since the neckline is horizontal, it's very easy, and the neckline is not going to change. It's not inclined. We can already project where that would point, and that would actually point to 25.90, right? So if we do get that kind of head and shoulders formation, and we do break lower, then as you see, the head and shoulders target more or less coincides with this horizontal support area that we've marked. So I would expect a move down to this area of support. So I do think that things are very clear. We have a descending trend line here. If we break above it,
61.8 is 27.52 and change of the decline.
Okay, yes.
Okay, and then you have a blue line. You have a blue line there.
Yeah, exactly. So it's either breaking above there and seeing some bullish follow through, or breaking below 26.90. In which case we should, we should test the 25.90 area. So
when you lean more with that interpretation based upon the decline being pretty impulsive and this bounce being more overlapping and corrective?
Yes, my gut feeling at the moment tells me that I would favor slightly a break lower. It's not only that, I take into account other factors as well. The fact that we have some real reasons of worry for the market. So there is a background, there is a thesis for this. Yeah. An extra reason is, I showed you the chart, if I remember right, the other day, is this. I definitely showed it on the chat room. This is the smart money flow. Do you see this huge divergence here?
Yeah.
So smart money, we're seeing some big outflows from indices, and smart money's divergence with what the stock indices are actually doing is impressive. It's might even be unprecedented. I mean, how big this divergence is. So, I take a lot of factors into account, and those more or less have me believing that the chances of a break lower are somewhat higher than a break higher. But you know something? That doesn't say much, because I do have two technical levels, and I'm going to let those indicate what we do from here, right?
Right. Yeah, I was reading something which was a pretty unusual event, that they said the T-bill auction the U.S. had this week was, that's a short-term paper, was almost a failed auction, Steve. Did you read about that?
No, I didn't actually.
Okay.
You mean there wasn't any demand? You mean?
Yeah.
There wasn't any demand.
It was, I think they had to cancel the auction because there weren't bids for a 90-day paper. The guy said it was a failed auction, T-bill auction. It hasn't happened in a long time, and hopes that's not a harbinger. Look
something.
Into it.
More or less, it makes sense, right? Because think about it. Who was buying until a few months ago the vast majority of the treasuries? Any
China.
Kind of maturity treasury.
Even though they say they
not only, and the Fed, right?
Yeah, right, true. Yeah.
Because they were still monetizing. Okay, now what do we get? We get increased record deficits. Yeah. How do those deficits get funded?
Yeah.
By issuing paper. So the US is issuing more paper than ever, and the Fed, instead of absorbing that paper, is letting it mature, right? Plus, if you add to that the Chinese have every reason not to be
they have their own liquidity issues.
Yeah. So, why would I be surprised by that? I mean, it makes sense, doesn't it?
Yeah. I'm just being a reporter here. Jimmy Olsen, Clark Kent here reporting in Steve Volge.
There is a friend here that makes a good comment. He says there is something that USD CAD is also trying to tell us, and he's right about that, because we got very strong Canadian data, and we got an initial move lower for the USD CAD. Let me move this, because this is what we were expecting. Let's move it a little bit. to the right-hand side so we can see what's happening here. So
I'm going to step away for 5, Steve. I'll be back for the interview.
Okay, mate. So
okay,
we go, yeah, mate. So we got an initial spontaneous move lower due to the very good Canadian data, and now we've completely retraced this move despite dollar being on the weak side, right? And you know this is definitely a telling price action. And I can tell you one more thing: we had indicated that the first area of support is here. Why? Because you know we had this high here at 131.30. If actually this proves to be a false break lower and we do close above 131.30 on the daily and obviously on the weekly as well, because today's end of the day is also is the end of the week. I do think that this is going to be quite an indication that USD CAD might want to resume the upside from here and not even make it down to 130 flat. Regardless, I wouldn't yet rule out another push lower towards this confluence of supports at 130 before we do see a resumption to the upside. From January 1991 to March 2001, we moved forward for 10 years without recession, which is the longest period the market moved without any interruptions. Last recession ended April 2009. It's almost 10 years. Yes, mate. That is the right comment. I've said that multiple times. This is already the second longest expansionary phase, of a business cycle. And this is already the second longest, biggest business cycle, and within maximum a year from now, it's going to become the longest. So yes, this also shows that statistically speaking, and whoever knows the underlying troubles of the global economy, that makes it even more certain. I do think, and that's why I've had several debates that have to do with political debates as well. I do think that the global economy will, one way or another, especially if we go through trade wars, etc., be in the next recession within this decade, right? So before the end of 2020. Personally, I do believe that the chances that it's going to be a lot sooner than that are very high, right? That's also why I've commented multiple times saying that, I don't understand what Trump is trying to do by trying to take credit of the economy and trying to claim that the economy is doing great, and how well the economy is humming, and how this is the best economy the US had like in decades or whatever. Because by claiming and saying all that, first of all, he goes against what he was saying up until a few months before he got elected, which he was right in the vast majority of the comments he was making, right? And now by trying to claim success, he's also claiming the potential troubles that are lying ahead for the US economy. So in essence, he's getting by his own in a situation equivalent to live by the sword, die by the sword, right? But if you want to claim within a few months that whatever positive is happening to the economy is due to you, and this is the best economy the US has had in several decades, none of which is true, by the way. I mean, let's all remember, or for those that are younger and don't know economic history, US was just, a few decades ago was the biggest creditor nation on the planet, and US is now the biggest debtor nation on the planet, right? US used to have amazing manufacturing and, exporting all over the planet. It's now importing almost everything, and it has an economy that's based on consumption, right? And, the only reason why the US is maintaining this level of consumption is because there are several countries willing to exchange actual products with IOUs. But until which day that's going to keep happening, I have no idea, but I can tell you that it's not going to be forever. Could you have platinum? Let's have a look at platinum and palladium, actually, because both of them are at interesting junctures. Okay, platinum came back retesting this broken wedge. As long as it fails from here, it remains bearish. There's no question about that. But this reversal candle here is, this actually is called a piercing line, right, which is a very bullish candle. We need to see if there's going to be any follow through. I would want to see a move above like 860 to confirm that this was a false break lower and this was a bear trap. Now, palladium, as you see, palladium is probably forming a triangle here. If we go down to 4-hour chart, I think it's going to be clearly a triangle. Yep, there it is. This is a triangle which is being formed right on very critical area of support. So, you know, on one hand, triangles tend to break in the direction of the trend. So I wouldn't be surprised. I mean, I think this should push lower at least once again. On the other hand, we have to respect this trend line holding for now. My intuition tells me though that we're going to see 900 print once again, right? You know, at least from a technical perspective, well, that's what I think. Many thrusts from triangles. USD CAD reverted it already. Yes. Could you please look at the gold S&P ratio? Sure, we can do that. I have a question about the Nifty as well, and I had another friend. Okay, let's look at the gold silver ratio because somebody already asked for that. Then we're going to have a look at the gold S&P ratio. Then we're going to have a look at the Nifty. Okay, so gold over silver. What did I mistype? Oh, yeah, we forgot an A. There it is. Gold over silver. Okay, we showed it the other day. Listen, I would really love to see a break lower from this huge formation. And usually when this happens, when this ratio is moving lower, metals are doing good. But we got another rebound from support. So we have to respect that. I don't claim that this rebound looks very impulsive to me, quite the opposite. I think that at some point it's going to roll over and move lower again, and we're eventually going to see this break to the downside. But we have to respect that so far the gold-silver ratio is actually holding this, you know, this ascending wedge. Now, the gold SPX, yeah, you know, clearly, and impressively,
nice. Yeah,
an impressively bearish move, right? I mean, we went from 1.7, right, which means that the price of gold was per ounce was 1.7 times the value of the S&P, right? And we've gone down to less than 0.5. Now, the question is, do I see something bullish here? Because obviously you're asking me, you know, you don't need help for me to tell you that this is a downtrend, but you're obviously looking for a possible signal of when this thing is going to be giving us some signs that it's reversing to the upside. And yeah, there are some signs that this might happen. I mean, you can see this as a descending wedge, right? So yeah, we might end up getting some kind of a signal like that, but
RSI too, Steve. RSI.
Yeah, clear divergence in the RSI as well.
Maybe one more drive. There's two there.
Perhaps.
Yeah, but you know, in the ballpark there. Good eye.
But keep in mind that
question.
Yeah, it's a good eye, and it's actually a good thing to monitor because, in all honesty, this has been a brutal trend lower from 2011 until today. And trust me, this thing is not going to keep moving lower forever. At some point, it's going to reverse, and it's going to reverse really strongly, right? So once it does that, there will be several areas of resistance here, and you know, once those start breaking to the upside, then at some point it's going to be clear that we're getting like a big rebound higher. So I think this is a good, you know, index to monitor.
How do you put a trade on like that? You just put equal weighting dollars on the
exactly that. What you said. You buy gold and you sell the equivalent amount in the index. Now, keep in mind the following thing. This thing, I mean, first of all, I wouldn't find it impossible if they already have some kind of a instrument that you can trade with that. But there is one thing that is 100% certain. This thing definitely, if you're long, it has a negative rollover for you, right? Why? Because holding gold yields no benefit, while shorting S&P is costly, right? Because, you know, just the dividends, just think about it. You have to pay somebody, you know, the equivalent of the dividends. So being long, so it has a negative carry in essence, being long this. Just keep that in mind. It's not going to be something huge. I'm just, you know, telling our friend here.
You're going to have to finance it.
Yeah, exactly.
Not
You will
just
have to
in
find
price, but in costs.
Yeah. And let me also have a fast look at the Nifty because I've already promised that. And then you can start your, oops, sorry. Anyhow, I think the Nifty issue is going to be covered immediately. Why? Because nothing has changed since the last time we saw it. Nifty is still trading within a triangle. And as long as it does that, you know, you need to remain patient. You need to wait for either a break lower and one more move to the downside, in which case I would be looking for 9,700 as the potential target, or a break higher, in which case I would be looking for a new high, right? So stay patient, keep monitoring this triangle. By the way, now that we already saw a low there, I can redraw this triangle like this. So keep monitoring this triangle. Support for this triangle currently 10,600. Resistance is roughly now at 10,900. So, you know, whichever of these breaks should produce some follow through. Anyhow, for the rest of whatever happens, you know, for updates, news, etc., ForexAnalytix members will be in the chat room, and, you know, we'll be issuing updates and alerts as we always do. And enjoy the interview and see you on Monday.
Okay, Steve, I think the downside of the Nifty looks niftier.
Yeah, might be the case.
All right. Adam Button, my buddy, Trading Warrior brother. Thank you so much for coming back. It's still early July, so maybe we could attack some of these seasonals.
Yeah,
I see your webcam. You're out of the there. You popped in like a secret agent, man. Huh? You're like James Bond, buddy. You look great. How are you?
Good. Yeah. Doing great this Friday.
All right.
On Friday, lively.
Yeah. What's the temperature like where you live? Are you in the heat wave?
This is time is good to be Canadian in July.
Yeah.
35 here. Well, that's not 100. I don't think. I think it's like about 90.
Okay, with 90% humidity.
Very hot, humid.
Yeah. Okay. It's like Chicago weather. So let me ask you about your impressions of the non-farm payroll and the dollar not getting a lift from any of the strong numbers.
Yeah, I mean, the market is still sorting it out. It's bounced back a little bit. I mean, you had unemployment tick up, right? And participation also ticked up. So it's not such a bad number on that read, although the wage growth was a bit soft. And I mean, that's the kind of name of the game right now. Headline, whatever, headlines are fine on the jobs growth, but it's that wage growth that's just not there. And, you know, that's what the Fed wants to see. But, you know, we hiked, we're going to hike again in a couple months, and the Fed's looking towards the end of the year. I don't know how much this is really going to matter, you know, with trade and everything else. This is kind of the status quo sort of report here.
You know, I know you follow market fundamentals. Is it true? I read something about a failed T-bill auction this week in the U.S.
Yeah.
Okay. Anyway, I heard about that.
That sounds, you know, unless it was something around the holiday, they pulled one.
Yeah, maybe.
You know, if they move things around and rumors get started.
Okay. All right. So before we talk about the tariffs, what are you looking for in July here?
Yeah, on the seasonals.
Yeah.
It's a strong month for yen. I mean, there's not that much going on in July in the seasonals. It's the biggest month for yen, the worst month for dollar yen. Seasonally, I think down 7 of the last 10 years, but 1.25% or a little bit better on the average in 10 years. So it's a soft month for dollar yen. In the bigger picture, there's not that much going on in terms of seasonals. You know, for outside of FX, it's it's a stronger month for equities. I mean, June was a soft month, and that was true in Europe. America was down just a little bit, but it was a soft month in a lot of places, as usual. June, July is a bounce back month. Europe is especially strong in July on the seasonals. Base metals pretty strong.
How about the precious? They turned a little bit this week, or isn't it entitled for at least a bear market rally? Gold back to
How high can a gold bar bounce if you drop a gold bar from the top of the building there?
Ouch.
Yeah, no, I think it's pretty soft. I don't think it would bounce that much.
Yeah, it wouldn't. All right, so still pretty negative there.
Oil. The interesting one is oil. There's this. Every year it's kind of strong in the first half, weak in the second half. Last year that was reversed a little bit, but that's the bigger seasonal trend, is that oil is weak in the second half starting in July. We've seen a little bit of that already, but that's a headline market right there. But I think there could be an argument. I mean, there are not a lot of oil bears out there, so watch out.
They were cleaned out. So we have started correcting. What's the average amount that it's down during the month of July?
I think it's about 2.5% on average on 10 years. Which you look at oil now, it's down.
We've done it.
The last 2 days, right? It's down.
Yeah.
But
okay.
So I think that's just the way oil is right now. It's very volatile.
So are there any currencies on the majors that you're interested in? Do you think Euro has a chance to make a move up towards maybe 120? A lot of people are talking about this, Adam. I'll put my screen up. The potential of a rally back to, I think, at least 1840. And some people think, and I started thinking about this a while ago, that maybe we get a right shoulder up towards 120, and then you have a neckline here. I think the dollar, and if we have a weak dollar, that would probably support the seasonals in the stock market too during July, because it seems to like a weaker dollar.
It does like a weak. I mean, it's kind of the old paradigm though. You have these lower yields a lot of time in July. So I mean, that's coming into the third quarter. You get a bit more bond buying, and that's kind of pulled down the dollar and helped to lift stocks. But that paradigm isn't really in play this year with the trade war. So I think if you were to get lower yields, it probably means some sort of risk-off sentiment, and it wouldn't do so much for stocks. But I look at that, and even in the shorter term, you kind of broken back above the end of the June highs just in the last hour. Payrolls, I think so. You're probably looking up at 118.50 for starters, and then depending on what happens there, I think if that were to give way, you can easily get up to 120, 122.
Okay.
Fairly short order. I mean, you look at what the ECB was saying today. They're trying to push expectations up. Merkel seems to have gotten back on top of things. Italy's settled into the political risks in Italy, and there isn't a big reason out there to sell the euro. You probably have some positive euro sterling flows given the mess that's happening in the UK. So, I'm pretty constructive on the euro down here, barring any disastrous headlines. But I like those technicals. And
okay.
Yeah, what happens when we get up to 120 and the right shoulder? It's probably a little premature for that.
Yeah. But you do the right thing today, and tomorrow takes care of itself. You brought up euro pound, buddy. I've been looking at this as being an incomplete formation for a long time, thinking that we have a 1, we have a 2, and there's something missing over here. And, I know a lot of the bears were talking lower numbers, and they had a false breakdown here. You're just talking about we could see good euro flows over the pound. Do you like euro pound in here?
Yeah, I think it's a good spot. I mean, if you look at that, there's so much indecision on that chart. And
yeah, in fact, I think it was a Forex Live tweet that had, I don't know, maybe you were quoting some broker that liked euro pound here. You do a lot of those kind of tweets where you tweet out.
This Brexit trade, right? Like right now in sterling, you've got Carney yesterday. It was pretty hawkish. And you had a nice, looked like a bit of a break in sterling or cable at least. And then, you know, it just gets slammed back down on a Brexit headline saying Germany didn't like the deal. And Theresa May's trying to put together this deal, and she's kind of hanging by a thread. You know, part of her party wants a hard Brexit, part of it wants a soft Brexit. They're both very dug in. And then she kind of wrangles everyone into kind of some poor compromise, and then takes it to Germany, and Merkel gives it a thumbs down right away. And, you know, what's she going to do now? There's just no way out. I don't envy her. And you know, at the same time, the economy's doing okay. Carney's talking about hiking. You know, Carney, he'll say he's going to hike one day and then change his mind the next day. But I think he's done that so many times that he has to follow through in early August. I think it's August 2nd is their meeting. So there's a bit of a tailwind there, and there's like this kind of detent in a lot of the sterling trades that could break, especially if things fall apart with May. But I don't know, maybe if the UK government falls apart, that ends up being good, you know. The market sees that as less of a chance of a Brexit at all. I don't know. So
yeah, you never know with a divorce going on. You have a feel for what's happening in the yield markets here? Adam, you know, we started to come off on the 10-year 310 and, you know, bounced here, but it looks like they continue to erode, and the longer term paper is even, you know, weaker, which means lower yields. And I think, don't you think that if the Fed follows through with a hike in September, that by the fall we might see an inverted yield curve? Because I think we're already seeing a global inversion.
Yeah, well, what's the 210s up to? What are we at now? If I just pull it, 27 basis points, 28 basis points between 2s and 10s. So you're, you know, and the Fed in the minutes yesterday was talking about an inverted yield curve. You know,
that it doesn't mean anything.
Well, yeah.
They downplayed it, right?
It's crazy when you listen to Fed, like some of them, Williams, for instance, of the Fed, he kind of dismisses it outright. And then you have Bullard, you have a few others that are very worried about it. And, you know, what's the Fed to do? You can't really, at this point, you can't walk back all the hikes you talked about unless the data goes bad or we get into some kind of trade war. So and even then, you would probably invert it on its own. So, but like, I guess the point is the Fed has manipulated the bond market intentionally. That's what QE is for so long.
Right.
That, you know, what do what should you really be taking a signal from that? You know, I mean, I think yields are going lower at the long end here. Like I said, there's a seasonal pattern of that. And you have a few Fed members, we heard it from Bostic last week, talk about, okay, maybe let's just do one more hike this year instead of two. So there's a bit of dovishness creeping in as well.
Yeah.
You know, you can invert it one of two ways. You could hike twice more and pull up the front end, or you could run into some trouble and then the long end gets pushed down and you invert it anyway. So it's almost inevitable at this point. It's so close, but I don't think I'm going to take it as a signal. But I mean, if you were to tell me that the yield curve is going to invert this summer, I mean, I'm selling stocks, right? Especially given all the other worries.
Okay.
Selling dollar yen as well.
All right, so I mean, I think the most embraced market thesis is that bonds are in a bear market, and I was talking about it. Here was the Fed. You know, they tried to pop rates after it came back down, and failed after the Fed rate hike. And if someone put a gun to my head, Adam, I'd say that we could come back and test these lows out again.
Well,
especially back under 270, huh?
I mean, the same people have been saying inflation's coming for 10 years now, and that's material. We're in an age of globalization and automation. And globalization is essentially moving production to wherever labor is cheapest. So that's driving down wages. And automation, which is taking wages away altogether, and they go hand in hand. I mean, if you can automate something to dumb it down so you just need a few workers, I mean, the workers are doing such little or such menial work at the end of the day that it makes it easier, and in that environment you just never get inflation. And by the same token, you can produce things so much faster, so much more efficiently, that anything you can make for almost nothing. And you know, that's my long-term belief in the market, that inflation is never coming back.
Okay, so inflation may not come back, but aren't higher prices going to hit the consumer when China retaliates and someone goes into Walmart? Aren't consumers going to be paying more for everything? So we could have kind of.
In that case, it would be globalization, right? That would be kind of like a de-globalizationary force if you get a trade war.
Okay, so that's what could unwind it, but that could take some time. Or you have the worst of all worlds, where you have deflation of financial assets and and bonds and maybe stocks and eventually, who knows, real estate, and that makes the job market more difficult, but we have to pay more for everything.
Yeah, that's the worst of both worlds, like a stagflation. How much would America tolerate that? You know what I mean? I think Trump measures himself by the Dow Jones Industrial Average, to some extent by the unemployment rate. I mean, is it so important to win a trade war with China? I don't know. Things can get out of hand, though. I mean, nobody goes into any kind of war thinking they want to see people dead, let alone even job losses. So things just they spiral and they escalate, and I find the amount of complacency even this week to be just nuts. I mean, the tariffs went into effect this morning, right? And China's hitting back, and America, we don't really know I guess we look back to America because Canada put tariffs on at the start of this week as well on American goods, and there's all this talk on autos, and the story this week that kind of turned sentiment, I guess if you listen to a lot of people, was that U.S. ambassador went to Germany and he talked to German car makers and he said, hey, we're not going to put tariffs on you if you take the tariffs off us. And people were like, well, that sounds like a deal, but this is like, that's been on the table forever. That's not anything new. He kind of Trump himself has said that time after time. And so I don't really get that. Markets kind of rally for a lot of reasons, and people will attribute things to it after the fact. But that to me it's nothing. But there we are.
Well, you saw the movie Canadian Bacon. Is life going to imitate art? Or is Trump going to start a war with Canada so poll numbers get better?
Yeah, I mean, he certainly doesn't want a deal. I think, you come back to midterms, right? And he doesn't want to sign an NAFTA deal until after that. I mean, the Mexican election's gone all right. They're keeping their negotiating team. I guess status quo is that.
What do you think of that election? You brought it up. What do you think of that? Would you be worried if you lived along the Mexico-U.S. border now, after this election, that left-wing socialists may do what happened in Venezuela? And, right now, Mexican migration to the U.S. has not been the issue. It's mainly been Central American people coming here, escaping from MI, whatever they are. But if this guy takes Mexico's economy the way of Venezuela, I don't think a wall will stop him.
No, I mean, it's as long as there's an open border there. I mean, that's the key to stopping immigration flow, is make things better where they are. And, if you listen to him, and the guy sounds very status quo from what he said so far.
Really?
And, just since he's won the election, I mean, like the campaigns, let's see what he does. He's like striking a committee on the airport. He's keeping the NAFTA team, and hasn't really said and done anything yet. And the Mexican system has checks and balances, and America's very strong in Mexico. So I don't really think it could happen there. But
the action,
have something like, you look at Syria, which is the ultimate example, right? And it's destabilized all of Europe.
That's true.
And if you're Europe looking at the United States, you say, the America's played a part in destabilizing Syria. And if you could play a part in destabilizing Mexico, maybe that's tit for tat. But I don't know if the world really works like that. I hope it doesn't.
But view on the peso, I have it up here right now.
I think for me, the best trade for a long time has been Acapulco real estate. I mean, there's a huge drug war there. It's terrible, but you're a couple hours away from Mexico City, and it's an amazing beach. It's a short flight from America. Eventually, it will get better. and it's cheap. So I think, you know, eventually you're going to get.
It's under pressure because people have fear of their safety to live there.
Yeah, it's blood in the streets. It's truly buy when there's blood in the streets. And there aren't that many great beach resorts in the world, but that it kind of comes back to Mexico in general. I mean, this is a country that's, you know, like literacy is like 100%. It's fairly modern country, you know, for peaceful country aside from criminal gangs, and you're right on the doorstep of America. You have oil reserves, you have other minerals. Like Mexico in the long term should be doing so much better, but you know, it was the same bet in 1995, and it hasn't really materialized. But one day, this drug war is going to end. You know, these cartels have to lose. I mean, you look at a place like Colombia; it's very peaceful now. Mexico, one day, will do the same thing. But you know, right now, I think it's also a pretty good trade. I mean, anytime this election risk passes, just into the short term, there's always going to be a bump. And you've seen it in every election in the last couple of years. The Italian election, you know, we saw the euro come back after that French election.
Right.
So it's always a relief rally, and we're kind of into that right now. Yeah, you can see it there pretty clearly.
How about these Nordics? Any view on like the USD NOK? It's been coming off lately, and USD SEK sold off pretty good this week. Any view on these?
Yeah, well, Sweden, the central bank stepped in there a little bit, and I think, you know, there's a sign that things are doing better there in all of Europe, and it will probably come through the Swedish currency before you see that Europe kind of disentangle itself from some of the problems. So I do like that on the broader European trade. The krona, it's about an oil trade, and I think the risks are a little bit to the downside here on that front. But you know, that's not really my cup of tea. Okay.
So Adam, why don't you tell our viewers what you do at Forex Live and the best way for them to follow you, and you really are one of the best I know at knowing market fundamentals and technicals, and you're a very news-driven trader. So what's the best way for people to follow you?
Yeah, well, one of these days, these trade war headlines are really going to hit. It's going to be a nice headline traders market again. We're at forexlive.com. So news comes out. We're the fastest on the news. We're the fastest on the analysis. The market moves, and you want to know why it moved. That's what we do. So if you see a chart drop out and you want to know why, go to forexlive.com. We've got it there. We're at Forex Live on Twitter. So those are the two best ways to follow us. We are quick, and 24/7, 24/5 anyway, whenever the market's open. Even during the World Cup matches, which I imagine people are starting to turn into.
Who are you pulling for?
Man, I like Latin America. I got a soft spot for that.
Okay. All right. So Ecuador. Huh? All right.
More Europe,
yeah.
And Brazil.
Okay, buddy. Thank you so much for coming.
What do you got?
Huh?
What do you got? Who do you got?
Yeah, I'd like to see. I always pull for an underdog because I'm one.
That's right. I like it.
You know what I mean? We're all every man. So the guys that have had the glory, I'm always pulling for guys that have not. So Uruguay would be nice. I'm in your corner there.
It's probably 3-0 France.
Adam, have a great weekend and a great summer trading season. Thanks for sharing your views. We covered the board again in record time, and I encourage people to go to Forex Live and follow Adam's work and also his partners that he has there, and it's a great site. So good hunting, buddy, and let's do this again soon. Okay, Dale, thanks so much for having me. Have a great weekend. All right, thank you, Adam. Adam Button, follow him at Forex Live, at FX_Button. Everyone have a great weekend. See everybody Monday. Good hunting the rest of the day. And don't forget to sign up for ForexAnalytix right here. You have the weekend to navigate and get used to it, because I'm looking for some wild action into the eclipse on the 27th. See everyone Monday. Adios.